Well, the Lal Street closed Friday on a somber note. However, the Nifty and the sensex gained for the second straight week for the first time in 2 months. Now, in this week's edition of the Editor's Roundtable, we put the spotlight on Midcap IT's performance. We take stock of key budget expectations. We also understand the big railway opportunity for India. I'm Sonia. I have with me Prashant, Nimesh and Reema. So I was like choking on, on the fact that in less than 10 days you have the budget coming up. There's so much earnings hitting you. You're bound to choke, guys.
Sonia, by the way, has a interesting day lined up, right? Full of partying, etc. Right?
I will party with a Reliance PNL, and Reema is going to be, partying with me, and the Geo numbers.
What time is it expected, though? I mean,
7:40. Historically, it's come at 7:40.
That's early, no? That's
Great
Friday will never stay back.
Friday, exactly.
But you know, the week was such where I was just looking at the stats, right?
Yeah.
Nifty flat, mid-caps flat. Non-index flat. I think the only thing that performed was IT, a tad bit because of good earnings. So it was one of those weeks where you want to call it perhaps the lull before the storm, you never know. But I guess all eyes will be on the budget and the big earnings.
And the earnings, right? I mean, the earnings this week kind of did not leave a good taste in the mouth because, I mean, earnings were more downgrades than upgrades. I'll just quickly present a couple of things which I think is important to note as we kickstart the show. The Nifty still, by the way, is battling that range, same range, 400 points, the downside about 17,800 to about 18,200 on the upside. And it's been that way for 3 weeks, all 3 weeks of 2023 so far. On the downside, I mean, the 17,800 broadly, that level is important. I could get specific. The numbers will come up on your screen. We've been highlighting that. The December swing low, it's not been broken, thankfully. So maybe we sort of escape without further pressure, further cuts. Earnings is what I think is important to note. Consumer companies and so-called growth stocks, and I'll put out a piece later, they are seeing earnings downgrades coming through. I mean, over the last 48 hours, companies like Asian Paints, Havells, HUL for that matter, PVR, I would rate LTT as L&T Technology Services as a growth stock. You're seeing more downgrades than upgrades. I mean, actually, you would be hard-pressed to find where there are upgrades, meaningful upgrades at that, at all, anywhere in terms of the earnings stack that we've got this week so far. I think the baton in that sense of earnings once again falls on banking and financial services companies. Over the weekend, ICICI and Kotak will report. So we'll see if that can do something for the market. HDFC Bank could not, but ICICI and Kotak will report. That'll be important. Reliance, as we were discussing, is important. Last quarter, we saw a bit of a pause, but will we see a resumption of the quarter-on-quarter earnings growth for Reliance this time around? I think that's a big stock. 12% weight in the index could move things around. Lastly, from the global arena, it's mixed. I mean, it's not really giving a clear picture. But mind you, the S&P 500, the benchmark there, is at an important juncture. It's basically once again testing the downward sloping trend line all the way from the January 2021 all-time high, which is held through this year. Every time it goes to that level, we see a 7, 8, 10% kind of a pullback. 2 days in a row, the S&P pulled back. I mean, not much, by about 1.5%, 2% in aggregate. Is this the start of a fresh downtrend? Or, I mean, this time we finally take that out. I think those are bigger questions too. Keep your eye out on. Sonia.
I don't know if you guys feel that way, but there's this very tight range, right? Between 17,800 to 18,300. There seems to be no major cue which could take the market out of that range. And we have Pratik Agarwal joining us in this studio as well. Pratik, thank you so much for being with us on the show. Great to have you here. Prashant very helpfully put up all the stats for us. Do you think there's anything in these cues that could take the market out of the range?
No, so beginning of the year when we looked at the market, we thought on 1,000 ballpark 25 earnings, we should be 18.5 times. So 18.5 is the range that one should expect the market to be for this quarter, which will actually sort a lot of the issues that we may discuss going forward. But definitely think of this period as a period of consolidation. Maybe debt looks a tad better than equity. And hence I say 1 quarter of consolidation smoothens things well for equities. Now, in terms of what Prashant was saying, this quarter and maybe few more going forward is not about sales growth and sales growth led earnings growth. It is about margin increases. and margin increases will be seen more in manufacturing versus in banks versus in IT, etc. IT also will see some margin increase, but more in manufacturing, which is where I think some positive surprises would come.
Okay.
Sonia, so while you spoke about the markets being flagged, Nifty, Sensex, but for me the big takeaway was the fact that the FI selling has abated. Just 400 crores of FI selling this week. When have we seen the last, just 400 crores of selling from the FIs? Two reasons for that. One, last week, when I gave that update of big FI selling, it was largely because of one of the long-only FI was unwinding the India position. So that's largely done with. And to that, there was an ETF buying as well whole of this week. So that's actually, helped the FI number to a larger extent. So that's a big takeaway as far as the deal rooms are concerned. The other important thing is, while earnings are mixed, Prashant spoke about it, but the big trigger for from next week onwards will be that we are moving to T+1 settlement. All the large cap names, the blue chip stocks will shift to T+1. That would mean that the liquidity will improve. And I guess this is like a kind of an historic moment as far as India is concerned. So that's something to track. But largely, the big takeaway was the earnings are mixed. The Nifty has been flat, indices have been flat. But the fact that the FI selling has abated a lot, that's a bit of a positive sign as far as markets are concerned.
Okay, let me take that forward and talk a little bit about what happened this week. And we got a flurry of mid-cap IT names, right? The previous week was all about the large-cap IT names, but this week we had numbers coming in from Persistent, L&T Tech, Coforge, Cyient, Happiest Minds, so many of the smaller ones also reporting. The key takeaway is that the mid-cap IT performance was very divergent. The large-cap IT performance was consistent. HCL, TCS, Infi all met expectations, did better. But in the case of IT earnings this time, Persistent, Coforge looked better than what the street was anticipating. And on the flip side, you had Emphasis and L&T disappointing. So the key takeaway is that the mid-cap IT performance is far more diverse. To elaborate on that point, L&T Tech downgraded its revenue guidance, but on the flip side, you had Coforge upgrading its guidance. So that's point number one. Unlike large caps, where the performance was consistent, mid-cap performance was far more divergent. The next point is, despite all the noise about macro uncertainty, slowing down on deal with, slow decision making, the deal wins this time have been very strong, even for the companies which have missed expectations. Take a look at Emphasis. Emphasis was a miss in Q3 numbers. It was impacted by their mortgage business, but Emphasis' new deal wins were the second highest on record. Coforge reported its highest ever order intake in the current quarter. Now, the point is that typically when this situation, when the external environment is far more uncertain, it's the large caps which generally have a steadier performance compared to the mid caps. And the reason is mid caps have a greater client concentration, a geographical concentration, or a vertical concentration. So if any of the drivers hit or if any of the legs misfire, then the stocks get impacted. In the case of Emphasis, for instance, they have a near 8-9% exposure to the mortgage business, right? Now that entire leg is not firing. In fact, it's declining for them. It saw a sequential decline of 20%, and that's the risk when it comes to mid-cap IT because they have a far higher concentration, either in top clients or in terms of specific verticals, unlike large caps, which have a more diversified base in terms of clients, geography, and even the kind of services that they offer. And that helps them tide through any kind of volatility in the macro environment. And one more final point, we were talking about valuations of mid-cap IT. Take a look at Persistent. Persistent is one of the most expensive mid-cap IT companies. Yet on the back of good numbers, the street rewarded it. Persistent ends up with a gain of close to about 8% despite it being very expensive. So that's telling, right, that there is interest in IT despite the high valuations for some of them. If the companies can give you the confidence that they can tide over this rough patch.
Let's ask the man next to you what he makes of IT. Pratik, any interest?
Actually, yes. So we at the house continue to be underweight IT, but versus the earlier level of underweight, we are now getting closer to where the index is, though still underweight. Now the point is, while there is uncertainty in the external environment, we have seen sharp cracks, and well, the whole debate is whether after the fall, post-COVID, will the growth rates fall back to pre-COVID levels? If they do, then the valuations are still higher. But if they sustain a tad higher, which is possible, then I think valuations are very sustainable. So we are nibbling there for sure. I take the point, the larger cap IT companies are steadier, but then larger cap IT companies are more order book driven, so more long period orders driven. less of shorter period orders. So the volatility in the smaller cap is also because they are shorter period order driven, which tend to be volatile. So and of course vertical. So if there are spaces which are doing well, open up trade.
Like mortgages, like Prima mentioned. I mean, that's
So you've got to
those
be
spaces
selective
will
when
do-
it comes to
absolutely,
mid-caps. Very
absolutely.
selective
Very
mid-cap
selective, very
IT.
selective.
Listen, thanks to your big brother.